This is the Capital Market. Hello and welcome to the program. I'm Edidiong Iwang. We begin the show with much-awaited earnings from listed banks as Tier 1 lender UBA has offered to pay its shareholders an interim dividend of 17 kobo per share for the first half of 2020. The information, which is contained in the financial statements of the company, shows that the dividend will be drawn from retained earnings, while gross earnings settled higher at 300 billion naira for the period. Pre-tax profits and post-tax profits eased to 57 billion naira and 44 billion naira each from the corresponding period. GT Bank has also released its earnings results for the first half of 2020, showing a slightly resilient performance within the period. According to the financial report sent to the Nigerian Stock Exchange, the bank's group's earnings grew by 1.4% to 225.13 billion naira. That's against 221.86 billion naira reported the same period in 2019. However, the group's pre-tax profit fell by 5.2% to 109.71 billion naira against 115.78 billion naira in the first half of last year, while after-tax profits also dropped by nearly 5% to 94.27 billion naira, while its earnings per share stood at 332 kobo within the period. But still with bank earnings, Stanbic IBTC has also released the results of its group's financial performance for the first half of 2020. Highlights of the results shows that the bank posted a higher gross earnings of 126.57 billion naira when compared to 117.37 billion naira reported the same period last year. At the same time, the group's pre-tax profit grew to 52.4 billion naira against 44.65 billion naira reported last year, while its after-tax profit fell from 36.24 billion naira to 45.24 billion naira within the comparative period. Zenith Bank has released its audited financial reports for the first half of 2020 with profit after tax of 103.8 billion naira. The Tier 1 lender is also proposing an interim dividend of 30 kobo per share to be paid to shareholders. The result shows that gross earnings grew by 4% from 332 billion naira in 2019 to 346 billion naira, while earnings per share increased by 17% to 3 naira 30 kobo. Access Bank is the fourth Tier 1 lender to release its H1 2020 financials, and the company is proposing an interim dividend of 25 kobo per ordinary share of 50 kobo. The bank's gross earnings grew to 396.75 billion naira in the period under review from 324.37 billion naira recorded previously. Profits for the period declined to 61.03 billion naira from 61.87 billion naira the preceding quarter. Now, away from earnings now, lately, the stock market has surprised Nigerians with bullish sentiments for a couple of reasons, one of which is the release of half-year results by Tier 1 lenders that also came with dividend declarations for shareholders this week. The other reason for the recent gains in the market has been identified as the low valuation environment of equities, as well as the activities of the pension fund administrators and the high net worth individuals in the market. These reasons put together has held the benchmark index of the market at the 25,000 psychological position as seen all through August and now seemingly driving through September and perhaps the rest of the year, as investment banker FSDH has said in its report forecasting bullish run for the markets for the last 5 months of the year. But apart from the PFAs, the question is who are those buying the stocks and for how long can they really hold these stakes in the market? Are they also really profiting from them or are they deferring their benefits? Well, these are some of the questions that a professor of capital markets and the president of Capital Markets Academics of Nigeria, Professor Uche Owaleke, will be joining us on the show to address this evening. Good evening, Professor Owaleke. Thank you for joining us on the program.
Thank you very much, Edidiong. It's my pleasure.
Let's begin with your assessment of the earnings of the Tier 1 banks that came in this week. What do you make of the figures?
I think it's cheering news that the financial sector it's proving resilient in spite of the headwinds coming from COVID-19. And of course, that's consistent with the MBS Q2 2020 report that we had. which speaks to the fact that the financial sector, particularly the banking sector, which of course dominates that sector, has not been as hard hit as other sectors by COVID-19. The fact that we are witnessing tier one banks in particular declaring, impressive profits, as well as dividends ranging from 17 kobo to 30 kobo, interim dividends. I think it goes to also speak to what the outlook presents in the coming months, that the financial stocks will remain good picks, especially given the fact that many of them, just as you rightly pointed out, have good fundamentals. By fundamentals, of course, we are talking about metrics like PE ratios, metrics like dividend yield, and so on. Relatively speaking, these banks have fared well. Stanbic IBTC too has also posted impressive results, and this is also being reflected in their share prices. Zenith Bank just the other day went up to as high as over 17 naira. GT Bank over 26 naira. These were stocks that were GT at one point not too long ago was under 20 naira, and there are still prospects that the stock will these stocks will continue to appreciate. So I think it's cheering news, and it should give confidence to investors in the Nigerian bourse.
Away from the earnings, offshore investors who have been risk-off in the markets and the debt and equity markets generally, can you help us understand the decision for being risk-off in the market?
If you look at the Nigerian Stock Exchange domestic and FPI report, that's a report on the level of transactions in the market. I think the latest was as of June 2020. Yes, it speaks to the fact that the domestic investors have held sway, for virtually throughout this year, since January. Unlike what we saw in 2019, it does appear that we are beginning to, if you like, detach ourselves from the apron strings of foreign investors. Between January 2019 and December 2019, for the entire 12 months of 2019, foreign investors dominated the market except for 3 months, specifically May, June, and December. Foreign investors held sway. But we've seen a reversal of some sort this year. Since January, it's been domestic investors leading transactions in the Nigerian equities market. And for 2 months in particular, I think April and the following month, May, retail investors also had the upper hand. Of course, domestic investors comprise institutional investors, mainly mutual funds, pension fund administrators, and then the retail segment, of course, comprising high net worth individuals. So I would say domestic investors are back, and they are, taking up the challenge to fill the void that foreign investors, have created. And it's a very good omen for us in Nigeria. Omen in the sense that it will go a long way to reduce the volatility we've seen in the market. We've had over time. Over time, usually, when foreign investors leave, the market, dips, and domestic investors panic and also leave. But this time around, domestic investors are showing some presence, significant presence in the market, and that's quite good.
But given the implementation of certain market-oriented policies of government lately, such as the electricity tariff hike and the petroleum downstream deregulation, can we say this has strategically helped resume their activities in the just-ended week? Well,
of course, as you know, I think you even mentioned it in one of your opening statements. For 3 straight weeks, the market has gained, has rallied. Up till yesterday, which was a Friday, the market was up by, I think, 1.16% week on week. It had gained 0.37% on Friday. It opened the week on a positive note. And the week before was the same. As a matter of fact, that of last week was 5 straight days of unbroken appreciation. The week before, we only had a drop one of the days, and the week before then, 3 out of 2. So I would say that for some time now, the market has sustained, a tempo of activities that is also likely to continue in the weeks ahead. Regarding the measures that have been taken, I also think that some of these things are usually priced in even before they happen. Once the market expects that they will happen, they get pricing. A good example is this relative stability we're beginning to see in the forex market, which I think is positive for the equities market. The fact that the central bank has a resumed sale of forex to deposit money banks to clear backlog. We have about $2 billion backlog of dollar demands. And they also plan to resume by Monday the sale of dollars to BDCs. That, of course, will bring stability in the market. It's already crashing black market rates, and it's going to be positive for the equities segment. The issue of electricity tariffs and the pump price of fuel. Of course, you know that. Let me even go back and go into theory. From a theoretical perspective, when you're looking at the determinants of particularly domestic investors' participation in the market, one factor there is the return. A domestic investor is after his return, just like a foreign investor as well. And that return is shaped partly also by the rate of inflation. So if inflation rate is high, of course, it means the real rate of return will be low. And so the investor gets discouraged. And you know that the hike in electricity tariff and the pump price of fuel, including the VAT that we had before now, all of them will combine as downside risks to inflation. They will combine to exert pressure on the general level of prices. So high rate of inflation is not good for the market. And as I said, to the extent that these measures will affect inflation, to the extent that will exert inflationary pressure, it's not going to be positive for the market. The other issue that is, if you like, is positive is the low interest rate environment we are currently witnessing, particularly the reduction in interest rates or return on risk-free assets is also helping the equities market, because when interest rates are low, the investors seek alternatives, particularly in asset classes. They consider having higher return, and they also consider, on a risk-adjusted basis, show more interest in equities.
So this week alone, we've seen 5 lenders release their earnings. 4 of those were Tier 1 banks, and we saw how it boosted the market. How much effect will their earnings have till the qualification date for their dividends?
Yes, I think investors will continue to take advantage of that until, of course, the register is closed. That's usually what happens. Those who want to benefit from the interim dividends that the companies have declared. There's no doubt that that's a positive signal to investors out there. Even theory has it that dividends, the signaling effect of dividends has a positive impact on the equities market. So I think it will continue to rub off positively on the market. The other thing I want to touch on very quickly, has to do with how to seize this tempo, how to leverage and take advantage of what is happening now to solidify the participation of domestic investors, in our market, particularly retail the retail investors. I was talking about the determinants of particularly domestic investor participation, especially retail investors. I mentioned cost, and I've also mentioned return. The issue of cost is also there. Cost of transactions in the market have not been as high as they used to be. I must admit that they have come down, considerably. But of course, they can still come down if the market gets some waiver with respect to stamp duties and VAT, as we had in the past.
All right, Professor,
the other
please,
two
we'll
has
need
to
you
do
to
with
hold your thoughts there.
Alternative approach.
Professor, we'll need you to hold your thoughts on that while we go on this short break. We'll be back to you. Welcome back. Thanks for staying with us on the program. Professor Uche Uwaleke, a professor of capital markets and the president of Capital Markets Academics of Nigeria, is still with us on the program. Professor, before we went on the break, you were talking about the effect of the earnings released by Tier 1 lenders who have on the market. And you're also talking about, investors taking advantage of these low valuations. Could you continue?
Yes, I was specifically talking about how to seize this opportunity to encourage the participation of domestic investors and change the narrative. The narrative has always been foreign investors dominating, and each time they leave, then there's a problem in our market. So this is an opportunity for Nigeria to increase the level of domestic participation, because that's what capital formation really is all about. That's what the theory of democratization of finance is all about. You don't mobilize savings just from a few people, and then channel to deficit units. Savings should be mobilized from as many people as possible in the spirit of democratization of finance. And that's where you give a lot of Nigerians the opportunity, to also contribute to economic growth. So part of what we should be doing is to look at the issue of access. Access is very important, and I say this from experience. I go on assignments, and people hear that I'm a professor of capital market, and then they come to me and ask, how do I take part in the market? How do I invest in the market? I was on an assignment at a university to conduct oral examination for PhD finance students, and it was the same thing. So my experience has shown that people are looking for how to participate in the capital market. So access is very important. And of course, in the past we had the Nigerian Stock Exchange, for example, having trading floors in many cities. Today is no longer the case. We also had the Securities and Exchange Commission, for example, having zonal offices in many cities. Today is just 3 zonal offices that they have, mainly Lagos, Port Harcourt, and Kano. Okay, so when you shrink, when you collapse these things, it also has its own disadvantage because it's now more difficult to take the message out there to people in other cities apart from the major cities. As you know, the capital market network of capital market operators are mainly concentrated in Lagos, and you also have a few of them in Abuja. So we need to find a way of reaching out. Now, what other countries have done, of course, in the money market is a different ballgame. The rollout of ATMs and agent banking, has helped a lot to improve outreach. But in the capital market, that hasn't been the case. We should be able to learn lessons from other countries, emerging markets like Thailand, for example, and Pakistan. What Pakistan did was to establish capital market business hubs in cities in Pakistan, where you have a central place where you have the exchange has an office, you have a brokerage firm, you have asset management company, you have all manner of capital market service providers in that place. In Thailand, Thailand partnered with banks. Okay, partner because they know that banks have a wider outreach. So they exchange their partner with banks to ensure that capital market products also get to the people. So we need to do something very seriously about access. As I said, there are a lot of people in other cities, in the hinterlands, wanting to participate, but they can't do so. We can also leverage technology, to do that. And I'm happy to note, I read about the iInvest, app that, I think a fintech company and the bank, they developed, So that can also help. The same way it's happening in Thailand, where you, through online means, you can trade, transact your capital market business. So that's important. The other very important thing I want to mention here is awareness, because the two things that boil down to access and awareness. Awareness is very key. Again, from my experience, my vantage position, I can also tell you that the level of capital market literacy is still low. It's still low in Nigeria. A lot of efforts have been made, both by the regulators, especially the Securities and Exchange Commission and the Nigerian Stock Exchange, but we still need to do more in the area of awareness. Just the other day, for example, it was announced that the chairman of the IST, the president appointed a new chairman of IST. And when the news broke, a friend of mine, a PhD student of finance, who sat beside me, was asking me, which one is IST? Which one is IST? So people at that level don't even know what Investments and Securities Tribunal, the role of IST. And if people don't know their rights, if people don't know that there is a dispute resolution mechanism in the capital market, of course, they won't have the confidence of investing. It's also akin to what happened, my experience. When I was on sabbatical in SEC as the chief economist and director of research, people will be coming to look for me at the Nigerian Stock Exchange, thinking that the Nigerian Stock Exchange was the same as Securities and Exchange Commission. So we need to, the point I'm making is that we need to do more about creating awareness about the capital market and the kinds of services that are available. Because I know, given a population of 200 million people, out of 200 million, even if we take the 60% that National Bureau of Statistics says are not poor, National Bureau of Statistics says 40% are poor. So we now work with over 100 million. Even if out of the 100 million, there is no reason why the absolute number, that's talking about the breadth of the market, breadth of the participation, the absolute number of retail investors in the market should be below 3 million, as we have it in Nigeria. So a lot can still be done in terms of awareness, particularly when people know that they don't need to have millions to be part of the market. We have the mutual funds, we have the unit trust. We should even emphasize that, using our population. That is why the capital market in Brazil, that's the strength of the capital market in Brazil, is the mutual fund. In Thailand, Egypt, I can mention some other markets, are retail investor dominated. And except we have that, we may not be able to have the kind of liquidity we are looking for in this market, because retail investors tend to trade more frequently, that's what studies have shown, than institutional investors. Institutional investors have this buy and hold attitude, longer term view. But retail investors, tend to trade more frequently and bring liquidity. So even when foreign investors are not there, we can have people, investors to fall back on. So it's critical that we should do something about literacy, which was why a group of lecturers in the universities came together to found the Capital Market Academics of Nigeria to contribute our own quota to the development of the market through research and teaching. And I'm happy to note that the regulators are supporting us, starting with even the former acting DG of the SEC who supported us, Ms. Mary Uduk, and even the current DG, Dr. Lamido Yuguda. Both of them are on the platform that we created to exchange ideas between academics and the people in the industry. The same goes to the DG of Nigerian Stock Exchange, Oscar Onyema, who is also on our platform, and the president of the Chartered Institute of Stockbrokers, Tunde Amolebe. So we are getting this support from the industry, and that's the whole idea, to bridge the gap between what is happening in the academia and the industry. So it is our hope that working together will improve on this capital market literacy and this capital market education. I'm aware, Professor, that effort has been made to introduce capital market studies in the curricula of secondary schools. I was even part of it. I was appointed a consultant to SEC at the time. We developed the content. But that of higher institutions is still what we need to work on. Because if you're looking at a low-hanging fruit, it's the universities, polytechnics and colleges of education that we should also target.
Professor, thank you so much for your input on the program. Professor Uche Waleke is a professor of capital markets and the president of Capital Market Academics of Nigeria. Thank you so much for coming on the program.
My pleasure, Odidio.
Well, that's all on the program tonight. Thank you for watching. I'm Edidio Iwang. Do remember to stay safe.